G'day folks, Jim here from FX Charts, Friday the 5th of April. Thought I'd do a quick video towards the end of the week, just ahead of the non-farm payrolls to see what we might expect. The currencies in general are all pretty boring, but there is some stuff going on elsewhere, and I thought we'd just go and have a quick look at some of the interesting points. Starting off with the S&P, which has been in this slow, steady uptrend. We really have hardly had any setback now since well, towards the end of the year really. So as you can see, we've had a really good quarter, quarter one 2019. So what do we expect here? As long as we hold up above this trend line here, which is at about 28.30, that's 50 points away, but as long as we hold above that, I suspect the trend can continue. The 4-hourly charts are looking a little bit neutral, but the dailies do suggest that we can go higher. We've taken out this previous resistance, and we haven't really looked back too far in the last few days. So I'm kind of thinking that all things being equal, we're going to head up here eventually towards this 29.40 level, which is the all-time high. Now we need a little bit of caution because there is some daily bearish daily divergence, but having said that, the weeklies look as though they're pointing reasonably sharply higher, so I still prefer to buy dips. I'd be looking on any close really below this sort of 28.30 level, 28.20. I'd be looking to cut my positions. We could then head back down here towards this 200-day moving average, which is 27.60. That's a long way off. I wouldn't be too worried about it yet, but that's what I suspect could happen on a close below this confluence of support here. The Dow looks pretty much the same. The other interesting things are the metals. Now this is a daily gold chart, and it does appear that we're building a head and shoulders top. The same really, let's go and have a look at silver. The same kind of applies to silver, although the neckline's more of a descending level of support. But going back to gold, if we do go through here, this top up here, which is around 13.45 to the neckline, is about a $60 move. So that would, from 12.90, that could potentially take us right the way back down to around these levels, so 12.30 level. So it's not something that we immediately need to worry about, and there's good support here at the 100-day moving average. So until that breaks, I wouldn't be selling it yet, looking for anything too major. And the only way that I think gold is going to feel huge pressure today is if we get a rip-roaring non-farm payrolls, which send yields markedly higher, send the dollar higher, and that would place pressure on the downside. I don't really expect to see the expectations for the non-farms are about 175, 180,000 with a headline rate of 3.8%. So following on from last month's very poor $20,000 rise, we should expect to see an increase, but I'd be surprised if it's above 200. And I think we'd need something above that to really put the pressure on the downside here today. The same applies to silver, as I said. The support here is really about sort of 14.90. If we were to break that, then the target is somewhere back down around these lows here, which is a sort of 13.85 or so. But that's a long way off, but it's worth watching. And in the meantime, we're just sitting around the 200 and the 100-day moving averages. Elsewhere, the other thing I'm looking at still is oil. Now we've broken above this 200-day moving average, and I suspect we can head on to this sort of 63.50 level at some stage. But we do need to stay above the 200-day moving average, which is around 61.5. I'd be looking to buy dips down towards that. Under there, I'd be getting a little bit nervous, because as long as we hold this sort of area of support here, around about this 50% level of the pivot of the whole move lower, as long as we hold above sort of 59.80, 59.90, 59.60, I stay relatively bullish. Under there, I'd be out straight away. So keep an eye on that. But for the meantime, prefer to be long rather than short. So I'll leave it there for today. As I say, non-farm payrolls expected 175k. The headline rate 3.8%. The average hourly earnings are expected to rise by 0.3% month on month. That's 3.4% year on year. And the average weekly hours are expected to remain pretty much unchanged at 34.5. So that's about it for today. I hope the non-farms treats you well, and we'll talk again on Monday. Cheers.